Good morning and welcome to the Killik & Co market update. This week we've had the latest inflation numbers for the US and they were a positive surprise, showing that the headline rate of inflation had come down to 5%. And this is a very different situation to the UK. Our latest reading came in at 10.4%. Here's a bit more of a breakdown of the latest US numbers. As you can see, inflation for all items was 5%. Inflation for food was higher at 8.5%, whereas inflation for energy was negative at minus 6.4%. Inflation for all items minus food and energy, also known as core inflation, was slightly higher at 5.6%. We know that the Federal Reserve likes to look at the core inflation rate when making interest rate decisions, so interest rates are still expected to go up by 0.25% when the Fed meets next month. Energy prices do have quite a big impact on the headline inflation rates. Here's Brent crude over the last 20 years. The rise in 2022 pushed up the headline inflation rate, while the core inflation didn't go up so much because it didn't include energy. Energy prices have then dropped this year, which is bringing down the headline rate, but the core rate isn't coming down because it doesn't include energy. The International Monetary Fund has published its latest growth projections. It now expects the global economy to grow by 2.8% this year and 3% next year, but within that, the UK is expected to be the slowest of the advanced economies, contracting by 0.3% this year. That's actually an upgrade on the IMF's last set of predictions. It previously said it thought the UK would shrink by 0.6% this year. Growth in the euro area is also expected to be low this year at 0.8%, with the US slightly ahead at 1.6%. These low growth expectations for the UK and Europe are arguably already priced into equity markets. Here we've got the price to earnings ratios, which are a measure of how expensive shares are in relation to how much profit companies are making for different markets around the world. The green shows the ratios at the end of 2021, and the pink shows the ratios at the end of March this year. You can see that valuations in Europe and the UK are significantly below valuations in the US. Valuations in emerging markets, and especially China, are also lower, which is because of the perceived additional risk. Valuations in Japan are relatively low as well, so do give us a call if you'd like to discuss investing in Japan in a bit more detail. And finally this week, we've had some data about personal computer shipments. There was a 29% fall in shipments between the first quarter of 2022 and the first quarter of this year. Looking at different brands, you can see that Apple has taken a particularly big hit, with its shipments down by over 40%. While the numbers do look a bit scary, they're partly a reflection of the amount of upgrading that people did in 2020 and 2021. People invested huge amounts in new computers and laptops while they were working home and trying to work more flexibly, and that meant they'd effectively brought forward some of the computer spending that would previously have taken place this year and next. So with that in mind, perhaps it's not overly surprising that we're heading for a period of slightly slower spending on computing equipment. Moving on to have a look at next week. Earnings season is kicking off, so we're looking pretty busy on the corporate calendar. We've got lots of companies scheduled to report next week, including Netflix, Rio Tinto and Procter & Gamble. That's it from us. Enjoy the weekend, and we'll see you next Friday.